bring in Erik Ristuben, Chief Investment Officer at Russell Investments, and he joins us for more on the markets from Seattle this morning. Good to have you back on the program. So interestingly enough, Erik, we were talking about how Russell had a call for the S&P to be about, what, at 1,300 by year's end. We're already there. So what are clients asking you now? We're going to see a flat rest of 2012?
Yeah, they're asking if we're going to see a flat rest of 2012 or are we going to move the number up. And our real forecast was probably best thought of as at least 1,300. We think that the overhang of Europe is far from over and that we're going to see another down, at least one down leg from where we are now, if not a couple by year's end. But in general terms, we thought that the risk was more on the upside than the downside. So we really wanted to send a message with our price target at the beginning of the year that it was a positive return environment for equities, but there was going to be a lot of volatility as Europe kind of went through its painful process.
Yeah, you said stock prices are cheap and will likely go higher, but there's a big if involved. That's if, of course, Europe does not get in the way. So how do you feel when Angela Merkel, the German chancellor, is saying time is running out, and I don't understand why we're getting a delay in this Greek deal?
Yeah, well, she said time is running out, and then she also said letting Greece go bankrupt was not an option. So she actually talked about both sides of the issue. Chancellor Merkel needs to get the best possible deal for the German tax dollars that are going to be aimed at this problem. And she wants to ensure that the countries that ran into this fiscal problem don't do it again in the future. And she wants them to agree on the plan to make sure that's not going to happen, or at least as much as she could possibly get them to agree before she actually writes all the money and writes all those checks.
Oh, right. So you're saying that, I guess, with the progress we've seen over in Europe in the last 2 months, that likely we'll see stocks higher. Maybe 1,300 is going to be the bottom, right? So what do you buy right now for this year?
Well, the base expectation was also that we saw the economic recovery that's been in place for almost 3 years now was going to continue. We've seen that in the U.S. The economic data in the U.S. has really firmed up. Europe is likely in a recession. Peripheral Europe's probably in a depression. The rest of the developing world is growing at pretty good rates, and China is now probably going to be easing. So we think the economic growth rate is going to be good. Companies and sectors that are exposed to cyclical growth are probably a good idea. Consumer discretionary, technology, energy. And frankly, one of the big moves in our of the managers we employ has been into financials, because they think some of the worst is by a lot of the banks. Got to be picky, got to be choosy, but they're becoming more optimistic about the prospects for bank stocks.
Okay, so you buy into banks, you buy into any other sectors? I mean, technology has been doing pretty well.
Technology continue. We think there's going to continue to be momentum behind technology. We think consumer discretionary makes sense because we think that the consumer, the marginal consumer in the developing world is going to continue to come online. We think the U.S. consumer is going to continue to be employed at marginally higher rates over time and will continue to spend. So we really are looking at, again, energy should be a beneficiary of this cyclical growth. So those sectors that benefit and those companies that benefit from economic growth.
Okay, well, let me ask you about the emerging worlds. Is there any concern about China this year? We had the International Monetary Fund and their Beijing office yesterday coming out and warning that if we do see a recession in Europe, we could see Chinese growth halve this year. What do you think about that theory?
Well, I mean, China's got a lot of exposure to Europe. I mean, China is an export nation. They're dependent on the developed world, Europe included, buying their goods in order to fuel their growth. If you see a major recession in Europe, that's going to have a demand impact on China. A short-term demand disruption, they can use their reserves to actually get through. A long-term disruption, a collapse in Europe, they don't have enough money to get through that, and that would be a serious issue for their growth rate.
Right, and quickly, Erik, I guess I wasn't pronouncing ticker tape pretty well. It is kind of early here in Hong Kong, but you're saying that the Giants aren't going to get a ticker tape parade?
Well, they're going to get a confetti parade or a manufactured confetti parade, but it probably won't be ticker tape.
All right. Well, there you go. Congratulations to the New York Giants for winning with Super Bowl 46. Thank you for that, Erik Ristuben.